Hey everybody, Greg Fisk here with JPAR Maryland Living. I am with Rob Sheppard of Rate, formerly Guaranteed Rate. Thank you for joining me, Rob. Appreciate your time.
Thank you very much, Greg. It's great to be here. I really
Yeah,
appreciate it.
awesome. Now, I always love taking time with people within the industry, see what products are out there, how we can offer some different things to not only agents, their clients, and some consumers. So, really interested in seeing some of the things that you guys have offered. But maybe first, just tell everybody a little bit about yourself before we dive in.
I'll make this short and sweet. I got into the business in 1998. I've been a producer and a branch manager over the years. I recently returned to Rate with a new rebrand of Rate from Guaranteed Rate, and I've lived in Anne Arundel County, north or south of Annapolis, 15, 20 minutes. Grew up in Galesville, live in Severna Park now, but I've been here working locally for since February 14th of 98. So and I'll be 52 in December. So it's over half my life almost, right? Or
Awesome.
yeah, over half my life.
Good stuff. Well, like I said, really appreciate you taking the time to share some of the things with you. And I know, kind of looking at some of the portfolio, the PowerPoint that you sent over, looks like you guys have a lot of stuff that might not just be like cookie cutter portfolio products, but things a little bit outside of the box. I love that, given the, helping empowering the agents expand their bandwidth or build out their tool sets, always fantastic. So we love sharing information like that. But tell me a little bit. I guess one of the things that really popped out at me, because we see sort of this paradigm shift within the workforce. One of the things I'd like to jump into is talk a little bit about like the products that you have for self-employed and gig workers, if you don't mind.
So for self-employed workers, everybody doesn't fit into traditional Fannie Mae, Freddie Mac, FHA, VA, USDA. They don't fit into those guidelines neatly, and and it can be troublesome. It can be a burden. So what we've tried to do is we've came up with our own suite of products that we work on in-house, and for self-employed, for alternate documentation, we look at bank statements, 1099s, P&Ls, and not just tax returns. They may not have they don't have W-2s in many cases. Gig workers is something that is a new term to me. Maybe I'm a little old, but a gig worker is somebody that's playing gigs, right? I got a gig down at
Right.
Brian Baru this weekend, or what have you. But it allows those borrowers to have access to home ownership, where they may think, there's no way that I could prove my income,
Yeah.
and qualify for a home. And it's just not true.
Yeah, for sure. I see. I'd like to take a look. Maybe after this, I'll have to do a little research on it. But more and more people are diving into that like alternative gig work thing to supplement incomes. We know, the buying power isn't what it used to be, especially in Central Maryland. Our affordability index is off the charts. One of the stats I love to throw out there, and I'm going to be doing some Hill visits next week for our members of Congress. But the median age last year for first-time homebuyers is 38. So, I mean, in some cases, people are really hustling, not only working two jobs and have maybe some gig work on the side. So I think that's fantastic.
I don't know how many times since 2020 you've gotten a DoorDash or Instacart, but those jobs are out there, and they're good paying jobs. Anytime you work hard, you can make some money. But the thing that I see is that people hear about these, but they just don't have someone that they can connect with that can tell them about it. It sounds like, hey, I won the lottery. Oh, well, how'd you do that? Well, I just did it. These people can buy homes, and I just, like I said, I don't feel like that the word's been out there. Hey, we have it. That doesn't necessarily do it. And then to have it in-house, have control over it, be able to close it in, the same amount of time you could close, a traditional Fannie Freddie FHA VA kind of deal. But anyway,
Yeah,
that's kind of an overview for
that's
some.
awesome. Yeah, I think I saw in your literature, like in some cases, only 1 year of recorded income for that too, which is great.
Yeah, I
So
mean, 12 or 24 months of bank statements, P&Ls, 1099s, just
awesome.
different ways to come up with the income besides send me your W-2 and your pay stub.
Yeah.
Let me do some calculations, and everyone can do that.
Yeah, that's what separates good agents from average agents. Same thing with lenders is looking for the solutions instead of just like the problems and stuff. So that's great.
Correct.
How about for investors? DSCR loans.
Yeah, DSCR has been around for a while, but I mean, it's for people that want to buy investment properties, um, and we qualify you based on the payment and what the rent schedule is going to be. We order a rent schedule from from the appraiser. They give that to us as long as that's $1 over what the payment is. They qualify. And those programs go from 50,000 to 3.5 million. So it's not just I'm going to buy a row home in Baltimore. Yeah, I mean, it's a multi-unit, it's unwarrantable condos. It's it's a lot of information, right, to take in, just in kind of our short thing here. But
Yeah.
for investors, they're around. And again, key for us is being able to do it in-house, have control over it. Another thing that people talk about, maybe we take for granted, is closing in an LLC. I get that once or twice a week, someone will say, can I close an LLC? Yes, you can. There's a lot of ways to do mortgages and close them and get them done. And it's having the solutions. But anyway, that's just one for DSCR, which stands for debt service coverage, right?
Yeah.
Cover the payment, and we can get a loan, and up to like 20 properties.
Yeah.
Anyway.
Yeah, that was sort of all the rage in one of my CCIM classes. And for the agents that are out there, if you're thinking about working with, if you're going to do some investor landlord summits, make sure you build out your team. It's not just about like the 1031s and having some contractors there, but take a deep dive on these DSCR loans and find out what's that about, because you could qualify for a loan based on the viability of the property and the product. So yeah, get with someone like Rob and add that to your portfolio of services and your knowledge base for sure. How about heavy or asset heavy clients, Rob? What do you guys have?
Asset heavy clients, the traditional lending channels, they do allow for asset utilization. Their guidelines requirements are a little bit more strict, but it's folks that maybe can't show traditional income coming in. There again, W-2s, pay stubs. If someone has an IRA and they're taking distributions from it, we can actually take that, divide it out or multiply it out by however many months, years that we need to for that specific investment, and then we can use that as their income. It's like I said, in Fannie Mae, Freddie Mac, jumbo products. There are asset utilization products. It just allows us a little bit broader of an approach to help more people with they call these non-QM loans, which the CFPB put this label on as a qualified mortgage, right? And it has specific terms, whereas non-QM is just one off. It's not a bad word. This isn't 2010, right? These programs are they're legitimate. We're not making up numbers. We're taking the documentation that they give us, and we use our calculators. We don't come up with funny math, and we help people buy houses with them. That's I guess that's really the most important part, is that the products are there. We're trying to get the word out to all the agents, and other referral partners, accountants, CPAs. They have access to this. A lot of times we have to interact with them in order to get the documentation that we need for these programs, and they have it at their fingertips. They know exactly what we're looking for. But anyway, it's
another tool in the tool belt.
Yeah, sure.
Yeah, and I mean, if you're working with some affluent clients out there, this is it, and this is a great opportunity. Utilize like maybe, ChatGPT. Drop this product into ChatGPT and say something like, are you asset rich but income light? We've got a product to help you out there. I mean, I know I've run across those clients, and it'll come back with a great social media campaign, and that's maybe an untapped market you weren't even thinking about before.
It's I have a little note here. It says it's great for retirees, trust fund clients, anyone who's asset rich but income light.
Yeah.
I guess I could have said that right from the get-go and saved people some time.
No, that's awesome. And you know, we see sort of this product percolating out there in the industry, but you know, buy before you sell. How about
Oh
that?
man, yeah, that's we'll call it what it is. It's a bridge loan.
Yeah,
um, and we have several channels, but we do have some in-house channels that we can provide bridge loans. You know, bridge loan is a product. It's very specific. When it's needed, it's a huge benefit. But 9 times out of 10, I take that back. Less than 90% um, go through. That's just been my experience around here. Especially with a lot of times they're trying to sell their house so they can buy their next one, but with the inventory problems we've been facing, they're not lagging. So what happens is people sometimes they get a little bit ahead of themselves and they go, I need a bridge loan. And I get the call and we walk through it and I explain it to them. Yes, we have it. You can qualify. Here's what you can get. But they're not that once they hear about it, if it works, it works. But if
yeah,
it's real tight there.
yeah.
But there again, we have it. If it works, it works. If it doesn't work in-house, we do have some other channels, but
Sure. I think
um,
it's it's probably worth a conversation if someone has a you know uh, home sale contingency or whatever. You know, it could be a game changer in a challenging market like Maryland, but maybe even cross states depending on one market to the other or something like that. I mean, you don't know what you don't know probably until you talk to an expert like yourself when it comes to something like
the
that.
the last one that I was approached about, second to last one, client was moving to the Midwest from here. And as it turned out, we were able to qualify them through a different product, and it would have worked for them. But once after 10 minutes of figuring out whether you qualify for it, then at least you're able to make an informed decision and
Yeah,
you're able to have options. That's the biggest thing with any of this is having options. Okay, well, I can't show W-2 income. Okay, well, we have a suite of products, that we can utilize to help. Look, this is about helping people buy houses, right? That's why you and I are talking. You help people buy houses, and I help people that don't have cash finance them, right? What
yeah,
a great combination.
yeah. Or leverage options to help them get into homes. Yeah, and I love the word options. That's what it's all about, right?
Yes,
All
options and
right.
information and education.
Yeah, for
Um,
sure. I love it. Yep. Options, information, and education. That's absolutely the name of the game. How about let's tiptoe into like two dirty words. Interest only.
oh yeah, I, I can dip a toe in these waters. So interest only. There again, you said dirty words. Um, yeah, maybe. But there it's seasonal workers.
I
Gig.
just I think it gets a bad rap sometimes, It's
It's
but
like,
the
hey,
product's useful at certain situations.
it can have a bad rap if you're looking to buy something that you can't afford, right? And that's what happened in 2008, 9, 10. We brought the economy to its knees. School teachers making 600,000. That I don't know if that worked. I don't think that worked out too well on some of those arms when they switched. But our interest only loans allow, most of the traditional ones, 10-year interest only period. And we could even take after 10 years, have a 30-year amortization. So it's actually a 40-year loan. But that's perfect for clients that are focused on cash flow and planning for like short-term ownership.
Yeah,
Um, it's great for people that like that. And these are financial tools, right? The self-employed borrower that has a great accountant should not be excluded from buying a house. That's kind of the DoorDash driver, Instacart, musicians should not be excluded from home ownership. These just allow them the opportunity to learn about how they might be able to do it, put a plan in place, and hopefully buy something. That's the dream, right?
yeah, absolutely. Now I love it. Being kind of that go-to problem solver. A couple other like operational highlights you guys have. You have fully dedicated in-house underwriting, right?
Yeah, so just kind of an overview of what these products can help people buy. 1 to 4 unit houses, condos, like I said, even non-warrantable condo tells, co-ops. We don't hear about those very much around here. But we have fully delegated in-house underwriting. We close them, we fund them. We have down payments as low as 10% for these products. 15, 40-year terms, fixed ARM, interest only. We have buy downs. We can close, like I said, the advantage for us, our clients, our referral partners is the control that we have. We have the products, we have the control, we can put it on the street, and we can do it quickly and efficiently. And that helps everybody in this environment, especially with all of the demands of buying a house, making it easy and efficient for the borrowers, helps everybody out. It's tough enough as it is.
Yeah.
We want to provide more opportunities.
Absolutely. And I know, like you said, not a lot of co-ops in this area. Co-op funding can be a little tricky sometimes. There's a few areas in Baltimore, a few units, some more out of the DMV area as well. Maryland Realtors is getting ready to release a updated addendum amendment to address that. I know within JPAR, we've had a couple of them in the past year and a half, which are different animals, but we had to go out and find someone who specialized in that kind of lending. So it's good to know that you guys offer things
we hear about like New York.
Yeah.
New York, they're all day. New York City. DC, they're more prevalent than actual our area. But we can do them in all 50 states. So
awesome.
That's
cool. Maybe so throw you a little bit of a curveball here. In line with one of the closing questions I had was, hey, Rob, how do you see rate portfolio supporting agent growth and client success in Maryland? But I know you had sent me like a property information sheet before too, I think as well, something that you guys offer.
That's kind of a side note. And this was a big topic with Maryland Land Rec charging 20 cents per page to download and view information about homes that are, that I think we should have free access to.
Yeah,
I have access to that, and I can put a report together for any property that's in the land records, really.
awesome.
If the home you're looking at is over 100 years old, obviously you can get that information for free. But I do have that report. If you wanted to buy an investment property and you wanted to use a DSCR loan on it, I can get you who owns it, what's owed on it. I can do a farm and see what else is available within whatever kind of parameters I put on it. But that's for another day. Maybe we'll do something on that on another day. It's
sure.
We only got a couple minutes left here.
A nice little teaser. Yeah, for sure. Like I said, I really appreciate you taking the time to kind of update us on some of these unique products that you have and what Rate's all about. But how can agents learn more about Rate Portfolio?
Well, the easiest way is to reach out to me. I can give you my cell phone number. It's 410-320-2817. My email is rob@rate.com, and rate.com/Rob Sheppard is my website. But any of those, you can call, text, or email me. I answer my phone or I text back. I put something out there about I'll buy you lunch if I don't answer my phone. So I constantly got it in my hand. No, it's this is just this in-house suite of portfolio products is something that it's different, right?
Yeah.
We're all looking to help as many people as possible. And we're in it together. And I really appreciate you taking the time with me to allow me to talk about it. Hopefully people can see from my facial expressions and my voice that, I really believe in it. I know about it. I know how to implement it. And it's a 10-minute phone call, or, I send you a link and you fill it out, and then we have a 10-minute phone call, but it's really easy. We don't do hard credit pulls I don't have to pull a hard credit pull until underwriting in most cases. So that's something else that people get nervous about dealing with people like me, right? And all I want to do is help people buy houses.
Awesome.
That helps me pay for my house.
Right. Good deal. Yeah.
Right.
What's that Zig Ziglar saying? Like, if you help enough people get what they want, you'll get what you want.
That's right. And for 27 years, that's what I've been trying to do. So
Awesome.
we'll keep
Awesome,
on
man.
keep on doing it.
Yeah, well, I'm going to make sure that we put your contact information into the YouTube down here, and I know you got some upcoming trainings and stuff, so we'll
Yeah,
all sort of
I think
stay tuned.
I wasn't really prepared for that one, but I think there's one in June, but I'll put stuff out on social media. I'll send it to you. You can share with the agents on your team. And I think we were having maybe a live portion and a Zoom portion, but I'll get the details on that. It's kind of like a Monday afternoon for me, so I
Yeah,
got slammed pretty good this morning. So we're digging out of the weeds, but I'll definitely get you that information. And there again, I really appreciate all the time you've taken with me and allow me to share what I hope will help some more families, more agents, do what we do.
outstanding. No, I really appreciate your time. Thank you very much, Rob.
All right, thanks, Greg.